Hey everyone, it's Ryan Leonard with Wolfnest Property Management, and today we're going to be talking about a topic that I get questions about all the time, especially from new investment property owners, even DIY landlords who've been doing it a long time. They usually have a lot of tax questions. Now, do want to say up front, because I am a licensed real estate agent, that I cannot give, let's say, tax advice for your portfolio, and I always recommend talking to a CPA or a tax professional, but there are some basic things that you can do when you're a landlord to kind of help ease some of that stress come tax time. So let's be honest, having an investment property is great. The passive income, having it appreciate year after year. Hopefully one day your properties are going to be paid off, and it's like an ATM that just kicks out money to you each month. However, if you have been doing it yourself, come January, February, March, April, May, you could start getting a little nervous about, am I doing everything right? Did I forget to submit anything? So again, having a CPA tax professional, highly recommend doing that. But if you are someone that likes to do it yourself, just keeping everything in one place, having a spreadsheet of, any receipts or expenses, income coming in. Really good way to stay on top of this is, again, just to be organized. So let's take a look at some of the tips and tricks that we got for you. So one of the things, again, some of the essential things that you want to see is record keeping. Anytime you spend $1 on that property, you want to make sure that you're keeping track of that. So that's a trip to Home Depot or to Lowe's, or if you need to send a plumber over to that property. These are all things that you want to make sure that you're keeping record of. And don't wait to the end of the year and just have a big box of receipts. Trying to stay on it regularly, even if it's once a month, once a quarter, even semi-annually. The more that you do throughout the year to stay organized is just going to help you, come tax time. Also, you want to make sure that you're looking at specific tax rates for your county and really kind of factor that in. Now, it could be anywhere from 0.03 all the way up to 2%. Now, the good thing about Utah, it is one of the most landlord-friendly states in the country, and we're typically around 30% lower than the national average. We're usually at about 0.058%. Now, again, that is always subject to change, but as far as come tax time, making sure that you have an idea of what your specific tax rate is going to be. Next thing is deductions. This is one of the benefits of having an investment property, is that it's a great little tax shelter. Also, there's a lot of things that you can write off that you may not know about. Now, any marketing you do, leasing fees, professional services used, interest paid, depreciation, any driving to and from the property. These are all things that can qualify as far as tax deductions. Also, these rules are subject to change every year, so making sure that you're up to date with what you can write off and what you cannot write off is obviously very, very important. But again, it all comes down to having that documentation, right? So don't just say you spent $500 at Home Depot. Make sure you have a copy of that receipt, because if you ever do get audited, you want to be able to provide all that information. Now, like I mentioned, tax advantages of rental properties are kind of through the roof. Now, write-offs is what we like to see every year, and anything that you have, like even a management company managing that property, that's a great write-off, because that is a operating expense for that revenue generating business. And one of the things that we provide our clients at the end of the year is a quick income expense breakdown. We can also provide it broken down by GL for any maintenance, like HVAC, snow removal, yard care, plumbing, electrical. Those are all things that we can even break down by vendor and GL, but also having a rolling 12-month cash flow statement so you can see how it's performing month after month. And again, a big benefit of having a management company is that this is an operating expense, that management fee is. Other things you can do are capital gains deferral. You can also do depreciation as well. So a lot of cool things that you can do. At the end of the day, I always recommend you talk to a CPA tax professional. Just get some consulting or some good practice. But I think you'll find that the CPAs and those professionals are really worth their weight in gold, especially as you start growing that portfolio. So if you have any other questions, again, this is pretty basic, but some things you guys may not be doing. So if you want to go into a little bit more depth or talk about your portfolio, there's our website, my phone number. Give us a call or shoot me a text. Happy to discuss our services and see if they could be a good fit for you. Thanks.